Good afternoon and welcome to the class on VAT. So we are going to talk about VAT, value added tax. It's going to take a while, so I want you to sit up as we look at it. We are going to, let me create the content here. We are going to look at the imposition of tax. Then we will look at the syllabus. We will try and understand who a taxable person is. Then we will look at registration for VAT. So we will also look at the supply of goods and services. And I think we want us to also talk about taxable supplies. We will be looking at the time and place of supply. So all in here, we'll be looking at the taxable value, calculation of the taxable value and tax returns and all those stuff. So that is what we want to look at. And there are a lot. And so I just need you to sit tight. So let's start. Okay, let me create a fresh page. We can start. All right. So let's start our lecture on VAT. Now, first of all, you have to know that VAT is a consumption tax. So the name is value added tax. The tax is supposed to actually be on the value that you have added. Okay, so if not added any value, then it means that you don't charge the VAT. So a VAT, like I said, is a consumption tax. Okay, so it's a tax on expenditure. All right, so it is actually on the value added. Okay, so it is levied on the value added. Okay, so not everything, but the value that has been added. Okay, on value added. Tax is on the value that you've added. Okay, so if you've not added any value, then it means that you can't charge the tax. So it's a tax that is levied on the value added to goods or any services generated at each of the stages of production, okay, or the distribution chain. Okay, so that is that. We are going to look at the VAT Act. Okay, the VAT Act 2013, the Act number 870 of Parliament. And that is what we are going to look at. Okay, so that is what VAT is, consumption tax on the value usually imposed on the value added to a goods or services in the production process or the distribution chain. Okay, so that is that. So if you want to avoid the payment of VAT, then it means that you have to decide not to incur the expenditure. So if you incur the expenditure, then that one means that, I mean, you will have to pay VAT. Okay, so that is that. It is also imposed on the goods and services that are produced in the country as well as those that are imported. So those are the things. And we are going to do this in conjunction with the NHIL and the GET Fund. Okay, so we are going to do it in conjunction with that. Okay, so now let's start with what the law says about VAT. Okay, let's start with what the law says about VAT. Now, like I said, If you want to avoid the thing altogether, then you don't incur the expense in the first place. But let's look at how the law has actually educated us on how we are supposed to go around this fact. Now, so first of all, the law is in its section 1 talks about the imposition of tax, of VAT. All right. Now, it says that VAT is imposed on goods or the supply of goods and services that are made in the country. All right. So the supply of goods, VAT is on what? The supply of goods and services made in the country. All right. Other than exempt goods or exempt services. Other than exempt goods or exempt services. So there are services that are exempt. All right. So apart from the fact that those ones will be exempt, every other thing is what? VATable. Not only those that are manufactured or supplied in the country, but those that are also imported. Okay. So those imported. So we are talking about import of goods or import of services. That one too, other than the exempt ones. Okay, so that is that. That is that. Now, that said, it means that all goods and services that are supplied locally or imported are taxable. So except those that are listed in the exempt ones are listed in the harmonized system. Okay, so we will be looking at the first schedule, okay, of the act. That is where those exempt ones are placed. We will be looking at some of them. Okay, so that is that. But other than that, whether produced locally or imported, they are vatable. Okay, so that is that. All right. Then the next thing that we would want to look at is that who is liable to pay the VAT? Who is liable to pay the VAT? Before I even go on to those things, let me hereby say that the tax that are chargeable on the importation and that are payable on the importation of goods. And for that purpose, you are talking about laws and regulations that are applicable to the collection of those that are in customs and import of goods, including the submission of import declaration with those modifications specified in the Act. So of course, there are some that you can obtain some reliefs on them. Okay. So that is what we mean by the exempt part and all those things. All right. So that is that. Who is liable to pay VAT? Persons liable to pay VAT. Who are liable to pay VAT? VAT is payable under different circumstances. Okay. So in the case of, let's say, taxable supply, the law says that VAT is paid by the taxable person making the supply. Okay, so it gives indications. So it says that VAT can be paid in the case of a taxable person, so what I'm going to do is that I'm going to pull up the law itself, then we're going to analyze it from there. So let me pull up the VAT Act. Okay, so this is the VAT Act. All right, so this is what we're looking at. So we've talked about the imposition of tax. These are the schedules. All right, so that is that. So where you should be focusing on these areas. So dealt with the imposition. So the persons who are liable to pay VAT, we are talking about in the case of a taxable supply by the person making the taxable supply. In the case of an import of goods, it is by who? The importer. All right. So if you are importing a good, you will be the one who is liable to pay the VAT. All right. So that is that. In the case of imported service, by the recipient of the service. So please, these are key things you have to know. In the case of a person making a taxable supply, it is the taxable person who is making the taxable supply. In the case of import, it is the importer. And in the case of an imported service, it is who? The recipients of the service. All right. So in case you have a non-resident person, which by this time I believe you know who a non-resident person is. In the case of a non-resident person required to register for VAT under Section 16, we will look at what that section talks about in Section 16. So Section 16 is actually about an unregistered non-resident person who provides a telecommunication service or any electronic commerce to a person for use, or enjoyment in the country. So if that person is not registered, probably, but that person exceeds the threshold that we have, which we'll talk about in the registration, that person, so the law says that it is that non-resident person who is liable to pay what? The VAT. Okay, so the telecommunication things that we are talking about those who are doing transmissions and emission and receptions of signal, writing images, sound of information, and those radio activities. E-commerce covers business transaction that takes place through electronic transmission. Okay, so if you are in this, like let's say the website supply, web hosting, those people that are doing those kind of distance teaching and those things, you are forced as a non-resident person. So in the case of a non-resident person, required to register under Section 16. So we are talking about those in telecommunication, those in the e-commerce, all right? So those are the ones that we are talking about. If you are in that, then that non-resident person is the one who is supposed to pay. All right, so that is that. Now, the rate of VAT is 15%. This thing was in 2013. We all know it came back to 12.5, but it has gone back to 15% currently. But in your exams, be careful, because if the date of the question is not 2023, then it means that your VAT is what? 12.5%, not this 15%. Okay, this 15% is only applicable for when the question is 2023. But bear in mind that even in your exams, if there is any law that is passed, it has to pass through one basis period before they question it. So please, this is the rate you have to have in mind. Although nowadays it is 15%. It's 15% in 2023. Okay, so check the date of the question. I'm sure they will date your questions in 2022. And as at 2022, it is 12.5%. So just be careful about that. All right. So that is that. That is something you need to know. So that is the rate of VAT. All right. So that is that. Now let's talk about registration of VAT. Let's talk about registration. We will come to who a taxable person is. Okay, well, let's deal with that. Let's go systematically. So section 4 is talking about a taxable person. All right. So the law says that in the case of a taxable supply, it is what the taxable person who is making the supply, who is supposed to who is liable to pay the tax. Now, therefore, the law now defines who a taxable person is and who what we mean by a taxable activity. Taxable activity. Okay. So a taxable person is a person who has registered, all right? And by registration, you will be referring to section 6 to section 16. So you have to be registered as a VAT person to be able to be paying the tax. And how you get registered, we'll be looking at those ones very soon. So just know that a taxable person is a person who has been registered, who is registered for the purpose of this act, or not just registered. So please take note of it. Registered and what? Required to register. All right, and that is, we will come back to this thing. It's very, very important. Okay, so subject to that section, the effective date for registration of a person as a taxable person is the date specified or on the certificate of the registration issued by the General Commissioner under Section 9. You will look at that. I think that is the reason why it is very important that we look at the section, the registration first. So let's look at the registration, which is Section 6 to Section 16. So here we've seen that the three situation. In the case of a person, in the case of a taxable supply, it is what the taxable person making the taxable supply. Okay, so and in the case of an import of goods, is who? The importer. In the case of importation of service, it is who? The recipient of the service. Also, technically, the importer, sort of. All right. So that is that. Now let's deal with the registration, which is very important. The registration. Okay. Now we have types of registration. Okay. Section 6 to section 16 brings about so many types of registration. And so we are going to group them. First of all, we must know that any person who is engaged in a taxable activity, which we will define also. So just in case, if you remember, this is what we are. So these are taxable activities. Taxable activity means any activity that is carried out by a person in the country or partly or in the country, whether or not the pecuniary profit that involves or is intended to involve or in a whole or in a part of the supply of goods and services to another person. All right, so this one simply means that it is any activity that you conduct in the country. All right, so these are all talking about some of the activities. So without limitation to subsection 1, taxable activity will include what? Activities of local authority or unincorporated associations. So anything that you do, okay, the process of data, the supply of staff, the acceptance of wager, of stake, making gifts, loans of goods, leasing, and all those things. I mean, these are all what VAT taxable activity. Okay, and the export of non-traditional products, they are all falling under here. Okay, so that is that. Later on, we will try and go deeper into these things. All right, so those are the taxable activities the law is referring to. But back to here, we are going to classify the registration under, let's say, some group them into the Commissioner General's registration and the voluntary registration. But these are how we are going to group it. We are going to talk about the normal registration. We will talk about the voluntary registration. We will talk about the compulsory registration. We will also talk about group registration. Then we will talk about separate registration. Under which probably we'll talk about the division, registration, and the branch registration. All right, so these are how we are going to do it. Now, the normal registration we are trying to talk about. So this is what the law says in section 6. So registration requirement. All right. Now there is a requirement to registration. And these days the law has even been amended. And so we have, except otherwise provided by the act, a person who is engaged in taxable activity and is not registered for tax purposes shall then register. I mean, now, if, and this is if conditional, all right, if at the end of 12 months or less, the person makes, the person made during that period, the taxable supply exceeding 200 and what? Sorry, this is 120,000 Ghana cedis. Let me hereby say that this law has been amended, and now So what we are saying is that if your revenue, not profit, your revenue, okay, if it exceeds, now it is 200,000. So if your revenue exceeds 200,000 in a 12-month period or less, then it means that you are supposed to register for VAT. So this one is legal. So that one becomes what? A normal registration. All right. So that is that. Indeed, if you're a business and you see that your revenue will your revenue exceed 200,000, then it means that for a 12-month period or less, exceeds 200,000, you are required to register for that. The law continued to say that at the end of any month, if there is reasonable grounds that that person will make a taxable supply in the next 12 months or less, of exceeding the same 200,000. So please, this one too is cancelled. So this one is 200,000. All right. So if at the end of any month, so let's say you have January to December, if at the end of January you anticipate that for the remaining month that is ahead of you, you make a sale of 200 or exceeding 200,000, you are also to register for that. Okay, the trick here is that if you don't register and let's say you wait until December where you realize that you are crossing 200,000, your date due for registration is in January. It doesn't become December. So to be on the safer side, it looks as if you just have to register, okay? Unless you are so sure that in that particular year, your revenue will never exceed 200,000. Because if your revenue exceeds 200,000 on December 31st, it means you should have registered. Yeah, and the law will deal with you for the period of January to November or December 30th, you did not register. All right, so that is that. Okay, now the law says that despite today's 12 months and 200,000 caveat, a person shall register if at the end of any 3 months. So here the law decides to break this one down. Okay, so if at the end of 3 months, the person made, or during that period, the person makes a taxable supply of what? Here it is 30,000, but it has since this one went to here to be what? 50,000. So if from January to March, you have realized that your revenue will be what? Will be 50,000 or exceeds 50,000. And it doesn't end there. So this is how you read the law. It is if and. So let's say January to March, you made revenue of what? Exceeding 50,000. It doesn't mean so far as you have exceeded 50,000, you should go and register. No, it says, and there is a reasonable grounds to expect that the total value of taxable supply, I mean your invoices, made by that person during the period or to be made during the period in the remaining next 9 months will exceed what 100, here is 120,000. But like I said, the law has been amended. Okay, so if your remaining 9 months will make you exceed 200,000, then it means that one you have to register for that. So what this one is trying to say is that, so if January to March you made 50, okay, then you realize that, oh, okay, because I've made 50, there is a reasonable grounds that I will exceed the 200. I will exceed the 200 by the time December comes. Then you are required to also register. All right, so that is that. So to be on the safer side, it looks as if it is always good that you register for VAT as part of your tax type registration and be safe. Because these days, companies are not allowed to deal with people who don't have VAT. All right, so that is that. That is that. Now, okay, so that is what the law says. Now, it says that for the purpose of determining this threshold, which is the 200,000 threshold, the Commissioner General may regard the value of taxable supply made by the person. But the key thing is what we have mentioned. Okay, so I mean, those are the things you should take note of. Those are the important things that we should take note of. All right, but you see, there are other businesses who are exempted from these threshold stuff. Okay, so let me pull up the abridged version of the VAT law. You see that even when these people have threshold of 200,000, there are a particular set of people who are not meant to go by threshold. That one is a special case. All right, that one you have to register. Whether you like it or not, you have to register. Like those things, those of Shakawale people who are going to run a show and all those, the other people. The law gives them, for them, they have to register within certain hours. All right, so let me see. I have an abridged version of the Act. All right, I think I can't find it here, but let's move on. So what I'm talking about is that despite the threshold stuff that you have, we have some category of people, and I'm going to talk about the three category of people. All right, so those people are mentioned under section 11 of the Act. But if you know, what I would say here is that if you know you are due to register for the VAT, I mean, you can go to the any VAT office, pick up a form, all right, and register. So that is why it says that a person who is required to register under the Act for VAT, VAT registration shall pick up a form in a manner that is prescribed by the Commissioner General. So when you go to any office, they will help you with that. Okay. Now, and what you should do is that you pick up your form. I mean, then you apply for the VAT within 30 days. All right. Now, so immediately you know that, okay, my sales is going to exceed, you have 30 days, all right, to go and do it. So by registration under 30 days at the end of the period under paragraph A, okay, at the end of the period under paragraph A of the subsection 1, so this is what you see. So this is what we are talking about. So if you fall within these people, okay, so those people who exceed the 200,000 in a period of 12 or less than 12 months, what you are going to do is that for you, your 30 days start counting. All right, your 30 days for registration counts. Says that the person required to register for VAT under subsection 1, which is section 6, subsection 1, shall file the application for the registration within 30 days at the end of the period. All right, at the end of the period. So it means that if yours is in December, you have 1 month, 30 days ahead of you to apply for the registration. All right, so that is that. In the case of those who have their own under subsection B, what is subsection B? Subsection B is where in any month you have a reasonable ground that within the next 12 months or less. So at the end of a month, if there is reasonable grounds to expect that the person will make a taxable supply in the next 12 months or less, that one to immediately in the month that you expected that to happen. Then, so let's say we are in January, all right, and I made, let's say, 5,000 sales. Now, if it is in this month that I expect that, oh, my revenue will exceed 200,000, it is in January that I will start. So if that is the case, then I have up to February. That is what the law says, the month under. All right, so you have 30 days after the end of the period. In the case of, let's say everything was 12 months. So you realize that you are in 200,000. You have what? 30 days after the end of the 31st December. In the case of B, where maybe in January, you now anticipated that, oh, okay, the thing will increase to the 200,000. Then it means that you have what? 1 month, which is what? February. All right, so that is what the law says. Okay. So the law says that a person required to register under paragraph A of subsection 2, which one is that? Paragraph A subsection 2 is the 50,000 caveat. Okay, so let's say in 3 months you have 50,000, and there is a reasonable ground that within the next 9 months you expect your sales to go over 200,000. You shall file for application within what? 30 days after a 3-month period. So if you were January to March, where you had the 50,000 and you expected that the remaining 9 months that is coming will let you exceed the 200,000, you have up to what? April, which is the next month, to register for the tax VAT. All right, so that is that. Now, this is where it becomes dangerous, and this is what GRA has been using against people. So this part, the section 7. The section 7 is very, very dangerous. That is what GRA has been using against people. Despite the threshold, all right, let me hereby say, despite the threshold of 200,000, 50 in a quarter, anticipating more than, let's say, more than 150 for the next 9 months, so that when you add up, it will be more than 200,000. There are categories of people in section 11. I'll come back to, so yes, so this is it, section 11. Okay, so despite the exceptions regarding the threshold, so when these are the people. So we are talking about promoters of public entertainment. So the Shatawale people, those who promote, they are hosting a shows. For that one, it doesn't matter whether you exceed 200,000 or not. For those people, you are required to register for VAT 30 days after the day you become what we call an Oceania. Sorry, that is for the Oceania. We are looking at public entertainment. So those who say, I'm a manager, I'm a manager, I'm a manager, I'm a manager. So those managers, you shall apply for VAT. You have at least 48 hours before the program, before the commencement of the public entertainment that you are conducting. So you have 48 hours. All right. So 48 hours before the commencement. All right. So that is that. And this is where the law caption it. So it says that for a promoter of public entertainment shall apply for the registration of at least 48 hours before the commencement of the public entertainment. If within any period of 12 months or less, that includes the date of the public entertainment to which the application released, the total revenue or the total value of their taxable supply of that promoter or licensed or proprietor, there is a reasonable grounds that his revenue will be exceeding what 10,000 Ghana cedis. So that is that. So you have to register within 48 hours. Okay, 48 hours. I mean, these people get more than 10,000 Ghana cedis. So before the program happens, you have 48 hours to register for VAT. If within a period of 12 months or less, and that period of 12 months includes that date of the public entertainment, you have your taxable supply of you, the promoter or a licensed proprietor, or you have reasonable grounds that that program is going to earn you more than 10,000 in that particular program or any other program cumulative that you do in any time in the year. You have to register for VAT within 48 hours. And then we look at these auctioneers. You know, auctioneer, those who auction things. For those people, you have to register for VAT 30 days after you become an auctioneer. Okay, so 30 days after the date you become an auctioneer. So that is that. And we are looking at the national, regional, local, and other authority of the body who carry out taxable activity. Okay, so if you are a national, regional, local, other authority or body shall apply for registration within 30 days after the date the national or regional or any other authority commences a taxable person. You know, these local assemblies and those people are not actually set up for those things. They are regulatory, but if they engage in taxable activity, they have to register for VAT within 30 days. All right, within 30 days after they commence that taxable activity. So there's nothing like 200,000 here. So for the promoter, it is exceeding what 10,000. For the auctioneer, no limit. 30 days after you become what an auctioneer, from the date you become auctioneer. Now, this one you have 48 hours if you know that your programs, the program you are doing and that which we will do will earn you about 10,000. So that is that. So that is the law. That is the law. Now, that said, then we come back to, so if you fall within these areas, that is what we call normal registration. So normal registration is the registration for those who meet the registration requirements. The registration requirements by the Commissioner General. So these ones, you pick up a form, and here we are looking at the areas where we've talked about. So we are looking at section 6. Okay, we are looking at section 6, and we are looking at what? Section 11. All right, so those are the areas. Right, so you have the section 7 and section 7, 8, and 9, I think 10 is talking about how the registration processes happen. All right, so if you've passed the requirement, then it means you have to go and register. So that is the normal registration. Now, you don't have to be in the normal registration to go and register. You can also go and register voluntarily. I mean, you go there, you apply, whether or not you have met the threshold or not. But that one, the CJ will look at your application under certain conditions. All right. And what are the conditions? The CJ has to be satisfied that you have a fixed place of abode. So fixed place of business of abode. These are questions that are normally asked. So the Commissioner General will only register you if you have a fixed place of what? Abode. All right. It means that these things also serve as a grounds on which he will not register you. So if you don't have a fixed place of abode or a fixed place of business, he won't register you. Another one that he also looks at is bookkeeping. Commissioner General will only register you on voluntary basis if you have a proper bookkeeping, all right, system in your office. If you don't, he will not register you. All right, so your bookkeeping, your accounting records. Another one is the submission of returns. Submission of returns. Okay, so if you submit regular and reliable returns to the Commissioner General can register you. All right, so that is that. So, but if you don't, you will not be registered. Okay. And the last one is that you are a fit and a proper person to be registered. To be registered. Here we mean that you are not a deranged person. You are not, what do you call it? Like you are not mad. I mean, you are not a criminal. I mean, so those things. Okay. So those are the things we talk about under the voluntary registration. Now, once you go through voluntary registration and you don't want to be there anymore as somebody who has registered for VAT, or you want to go for a cancellation or let's say a deregistration, so you only be looked at your cancellation and your deregistration will only be looked at only after 2 years. Only after 2 years. All right. So you can't just go and say, I'm canceling it. It will be looked at only after 2 years if you want to cancel. All right. So that is that. That is that. Now we have compulsory registration. Compulsory registration. So compulsory registration is the people who meet the requirements. So those who meet the requirements of the normal registration, but fail to register, but fails. Now, if you are in that category, the Commissioner General will force the registration on you. All right, the Commissioner General will force the registration on you. That is what we call what? Compulsory registration. All right, so that is that. Then we have the group registration. The group registration. You see, there are groups of companies all the time. All right, so group, let's say so and so group of companies. I mean, and in the group of companies, you see that there are individual entities in there, individual entities. But all those group of companies shall go and register under one VAT number. Okay, so the group registers under one VAT number, but the entities inside the groups will be severally and jointly liable. All right, each member within the group will be liable, okay, for any contraventions or any illegal thing that they do in terms of the payment of the VAT. Okay, so that is that. And the Commissioner General can actually appoint a member of the group. Okay, he can actually designate or appoint a member of the group and register the person as a representative of the entire group. All right, so that is that. You have to know that. And again, the Commissioner General can include a further company in the group or exclude somebody in the group or declare the group registration cancelled. He has that power to do that. Okay, so that is that. So and that leads us to the um, separate registration. So instead of doing it as a group, let's say you have a company which has separate branches or divisions. So instead of doing it as a group over here, each and every member will have their own registration. So that is how, if you are an accounting branch, a division, that the cash generating unit on your own, you can now register yourself individually. All right, so that is that. Bear in mind that so aside these ones that are looked at after 2 years in terms of cancellation or deregistration, all the others, the cancellation, if there has to be a cancellation, then the Commissioner General is empowered under Section 19, all right, Section 19 of the Act to amend, as amended, it has been amended to actually cancel any registration of a registered person. And those will happen on the following grounds. Section 19 says if the person no longer exists, okay, you are no longer carrying out a taxable activity. Okay. All right. You don't have, then the other ones follows. You don't have fixed place of abode. You don't keep proper books of accounts. You don't submit regular and reliable returns. I mean, the person becomes what? Mad, bankrupt, and all those things, criminal, I mean, all those things. So these ones add up to these, I mean, in Section 19 for the Commissioner General to cancel your registration. Now, the cancellation takes effect from the end of the tax period in which the registration is canceled. Okay, so it ends at the end of the tax period. So, I mean, the basis period is what we are talking about. The end of the basis period. So then it starts actually from the end of the basis period. Okay, so that is that. So what we are trying to say is that a taxable person whose registration is cancelled is regarded as having made a taxable supply of goods and services on hand, including capital goods at the time the registration is cancelled. All right. So, but the caveat has been given that no taxable supply in respect of goods on hand if the taxable person was denied an input deduction. So, if you were denied an input deduction, it means you have not made a taxable supply. All right. So, those are the things that you should take note. So, these are seeing what we're talking about. You're looking at Section 19. Section 19. So we talked about the designation of a taxable person in respect of division, where the Commissioner General can actually pick a member and say you are the representative. He can include or exclude anyone also from the group and treat him separately. So these are the voluntary registration that we talked about. So Section 13 and the things that we talk about are also here. All right, so compulsory registration is also here. All right, so those are the things that you are supposed to know. All right, those are the things you are supposed to know. All right. So I wanted you to see something under, the cancellation under Section 19. So these are the things I made mention of. All of them are here. All right, so all of them are here. All right, and I made mention of the fact that the cancellation takes off at the end of the tax period in which the registration is cancelled or from any other date determined by who? The Commissioner General. All right, and I said that if the person has been denied an input VAT, so the goods on, so this is the one I was talking about. Taxable person whose registration is cancelled is regarded as having a taxable supply on hand, including capital goods. But if input VAT were denied on those things, there is no what taxable supply. All right, so that is what you need to know. And yeah, okay. Now the thing is that if you're a taxable person and you cease to carry out business to which registration was made and you don't engage in those things anymore, you have to apply in writing to the Commissioner General for cancellation of registration, and you have to do that within 30 days. So if you want to cancel it because you are not doing the business anymore, you have to write to him within 30 days of cessation of your business. You don't leave the Commissioner General thinking that you are still doing taxable activities when you are actually not. So you have to. All right, you have to notify the Commissioner General on that. So that is that. Now, that said, we now need to go ahead and talk about supplies. Just a minute, need to pick up a call. Okay, so that's that. Let's now try and understand the supplies. Okay, let's now try and understand the supplies. We'll go into the computations very soon. So let's look at the types of supply. So types of supplies. All right, the types of supplies. We're going to talk about one, exempt supply. And we will talk about two, what we call the zero-rated supply. Then we are also going to talk about the relief supply. All right, don't forget that we have what we call taxable supply. So the exempt supply. So we are going to, what we're doing is that we are looking at the section 33 to section 38 now. Okay. So we are looking at taxable supplies. Taxable supplies. So types of supplies. So let me add taxable supply. And probably I can add what we call exempt import. Okay, so that is that. What is exempt supply? So the exempt supply, there are certain goods and services that are specified in the first schedule. Okay, so those are exempt. So exempt supplies are what we call the goods and services specified in the first schedule as an exempt supply. We will look at some of them. Then the zero-rated supply are also those goods and services that are, specified in the second schedule. We will look at some of them. Second schedule. Now here, it is not VAT at all. At all. You don't VAT them at all. All right. They are exempt from VAT. You don't even VAT them at all. They are exempt from tax. All right. So, and here it is VATable but instead of 15%, it is what? 0%. Okay, so that is that. That is that. Instead of 15%, it is 0%. Now let's look at the first schedule. Let's try and look at some of the things under first schedule that the law talks about. There are plenty. Okay, so these are what we're talking about. So from here, okay. So starting from, let's say, the taxable supply, it says that except otherwise provided in the act or any regulation, a taxable supply is a supply of goods and services made by a taxable person for a consideration other than exempt supply, all right, in the ordinary course of business of the person. So the things that you do in your regular office, you do in your regular office, selling and those things. Other than those that are exempt, they are all taxable supply. Okay, so that is that. Then the law continues to say in section 34 that except otherwise provided in the act on import. We will come to that, but since we are talking about exempt supply, let's try and catch up with it, because exempt supply is those specified what in the first schedule. Supply of goods is not an exempt supply if the supply is subject to tax at a rate of 0% under section 36. So it means that exempt supply cannot be a zero-rated supply. Zero-rated supply are those that are specified in the second schedule. And it says that where a person has applied for a zero-rated percent to supply under this section, the taxable person is required to obtain and retain documentary proof. All right, so you have to get a proof that substantiates that that person is entitled to zero rated. Okay, so we were on our way to the first schedule. This is the first schedule. Exempt supplies. So here are some of them. Okay. For the purpose of this schedule, these are the things you are supposed to know. Okay. So commercial rental establishment means accommodation or hotel, in a hotel, in boarding house, guest house. So these places are exempt from what? VAT, commercial rental establishment. They are exempt from VAT, in which the lodging is regular or normally provided to 5 or more persons on a daily basis. So that's why you need to check when you are going into a hotel or something like that. You need to check if they are parting you. All right. So you need to accommodation of a house in a flat or apartment. That is why we don't pay VAT when you are going to rent a place. All right. So that is that. So all these things, residential leases and all those things. Okay. Accommodation in a house, flat, apartment. I mean, all these ones are what we're talking about. All right, so these are just some of them. So accommodation. All right, so you take your time and look at some of them. Education services, that's why you don't pay VAT on your school fees. All right, so those are what we're talking about. Financial services, that's why you don't pay insurance on premiums. Medical services, so that's why you don't pay VAT on those things. Right, agricultural goods, aquatic foods, all these things. All right, so you take a look, just skim through. You don't need to memorize all these things. I mean, so you just know that a supply of textbooks, and supplementary readers on Ministry of Information and all those things. So education, this one to falls under education, supply of education services, supply of medical services, pharmaceutical goods. Here you have to be very careful because you see, pharmaceutical goods are not vatable. So if you go to the drugs that those drugs that are under the harmonized code, they are not vatable. But if you go to the pharmacy shop to buy water, I mean, in their fridge, buy chewing gum, those are not things that the pharmaceutical place is set up to sell. So those things are rather what? Vatable. Okay, so please be mindful of that. That is why we don't pay VAT on Trotsky, all right? So veterinary and all those things. So these all don't pay VAT here. Okay. The supply of crude and hydrocarbon products. It's nothing like VAT. All right. So please, immovable property, you don't pay VAT when you are buying a land. All these things are supply of goods designated exclusively for persons with disability, postage stamps, supply of human consumption, including table salt. So supply of mosquito nets. Okay, so those are the things. All right. These are the things under the first schedule that is not VAT. So that is exempt supply. Zero rated, we said that it is vatable, but the rate is zero. All right, and under section 6. So the ship conveyance via means here, we are talking about ship, shipcraft, and vehicle. Export countries in this schedule comprise of the said countries other than in this country. All right. So these are also the zero rated ones. These are the zero rated ones. Foreign going aircraft. All right, so free zone. Yes. So many a time, people make mistake of classifying the free zone under exempt supply. Free zone is not exempt. It is vatable. It says that the rate is what? Zero. All right, so please take note of that. Take note of that. All right, so that is that. That is that. Okay, so that said, let's go to the relief supply. So let's go back to our section 33. Okay. So we've understood exempt supply, we've understood zero rated supply. We have something we also call exempt import. So exempt import, we are talking about if the goods are under the first schedule, as you've seen as those exempt, or classified as under the conformity of the custom tariff, which is known as the harmonized system. Okay, so that is that. Now, let's look at now section 38, which talks about relief supply. So here we are referring to a supply, and in this supply, they are just transactions that is taxable under normal VAT rules. They are very, very taxable. But due to the status of the taxpayer, so this is the caveat. They are taxable. They are taxable under the normal VAT, but due to the status of the taxpayer or the intended usage of the goods or service, the VAT is waived. The VAT is waived. So those are what we call relief supply. So it says that, of course, the minister may make the legislation concern this, but those people who qualify under these types of supply, so we said that it is vatable, but just because of the person to pay the VAT and the intended purpose of the goods and services, the tax is waived. Okay. Now the thing is that when the relief provided under this section is given, it means that a person will claim a refund. Okay. So here, let's say I've sold to, let's say, the president. It is vatable. It's just that because he's the president, he will be relieved from paying the VAT. All right. So what now happens is that I have paid an input VAT on that thing, but I am not getting my output VAT. So under this case, I have to go and collect a refund from GRA. And when I'm going to collect the refund, I have to accompany it with proof of payment that I have paid the input VAT. And so I will just get my VPRO. All right. So what we call what you are going to use to claim your VAT. All right. The input that you made. Okay. So the relief you are going to. So here the law gives recognition to the president and to those ambassadorial let's say the foreign embassies, the mission, the consulate, and all those people, parliament, permanent members of diplomatic services, that's what I meant. In the case of international organizations and all those things. Okay, so you get your VPRO, you go and claim back your what? Your VAT, your input. So that is that. So here you are looking at these people who may get the release and all those things. So you have to, show proof that you supply to them. And since you have paid the VAT, the input VAT, you have to use it as your refund. All right. So that is that. All right. So let's go ahead and look at so we've talked about relief supply, exempt supply, taxable supply, zero rated supply, and all those things. All right, let's make progress. Let's make progress and talk about other forms of supply also. We'll be talking about the mixed supply and all those things. Let's make some progress and talk about other forms of supply. All right. Just a minute, let me pick this scotch. Okay. Let's talk about some other concepts here. I'm going to start from dealing with some talk about repossession of goods and supply of service, supply of goods. For one, let's talk about repossession of goods and supply of goods. All right. Now, there is a VAT principle of VAT input and VAT out. All right. So generally, what happens is that the input is deducted from the output. I think we will talk about that soon. The determining the taxable value, the amount that you pay, the So what happens is that, so there is input VAT, and there is output VAT. Okay. Now the input VAT are the taxes you pay when you purchase. Okay, so this one is purchase. So the VAT that you pay when you purchase, then the output is the one that you charge when you make a tax application. All right. So like sales. So at the end of the day, what you have charged and what you have purchased, the net is what you pay. The net is the net tax payable. It can be tax receivable if this one exceeds what? This one. All right. So that is that. Now, under repossession, what happened is that, let's say um, you sell goods, okay, to, let's say A sells good to B on credit. Okay, you sell the goods, you supply goods. Okay, now what happens is that if, let's say, B buys from A, okay, so if B buys from A, B would have this A person. So let me make it this way. Let's say A buys from B. All right, so A buys from B. All right, now what is happening is that A might have had some input VAT. Okay, input, so you pay input tax on the goods. All right, on the goods. Now, what happens is that B, so if A buys from, let's say if A buys from B here, A has made a purchase. All right, so that is what happened. So A has made a purchase, and A will have what we call input VAT. All right, so he will have the input VAT. But B, since B is the one that sold to this one, you have what we call what? Output VAT. Okay, so that is that. Now, if A now sells to C, okay, under a repossession agreement, okay, so I mean, it means that you sell and he's allowed to return the goods, all right? So what will happen is the repossession is like sale and return. So you can, when you sell, the person can return it if there is what we call returning words. All right. So what is happening here is now is that if A resells the good to C under that kind of arrangement, A is required to invoice C, all right, with a VAT inclusive. So A invoices C with VAT inclusive amount because he will charge the VAT. So that at the end of the day, the one that he had here, an input, and the one he is also selling, which is an output to C, there will be some kind of what? A net off. All right. There will be some kind of a net off. Now, what happens is that if the goods are now returned from C to A, so return. If the goods are now returned from C, following, let's say, an unfulfilled condition or something, then what is happening is that C in this case is supposed to invoice A. Okay, so once he's returning, he's supposed to invoice A. All right. When you invoice A, you invoice him with a VAT inclusive amount. Okay, so that is that. And when he invoices the A with the VAT inclusive amount, what is happening is that A will re-establish the VAT input under the repossession arrangement, so that when later the goods are resold, A will charge an output VAT on it. So you see that once this one comes here, and when you are invoicing it, you put all the VAT inside. When he returns it, the VAT is also inside. So the VAT cancels the VAT here. So the inclusive VAT will cancel the inclusive VAT. So it means that this man has to still sell the thing another time and will have to be able to charge the output VAT. All right. So that is what we are talking about. So you see that when he's invoicing C, there is a VAT output, which he intended to net off from the VAT input here. But since it has been returned, when he is returning it, he should return it with the VAT inclusive amount, so that the VAT between him and him, A and C, will be cleared off, so that A can now be able to resell the goods later, charging what an output VAT. All right. So you see that for the VAT to work under the repossession, what we are saying is that C must be registered for VAT. All right, C must be registered for VAT. Then you see that the goods should form part of the asset held by C in connection with the taxable activity. So that is what we are trying to talk about. All right. Okay. Another thing I may want to talk about is the supply of power. Supply of power. Okay, so here we are talking about those who supply power, ECG, heat, refrigeration, ventilation. Please, those things are treated as supply of goods, not service. Okay, in Chukoto ECG, it is a supply of goods, it is not a supply of service. All right, so that is that. Supply of goods, not supply of service. Kindly note that. And also, let's say those who do phone cards and prepayment as supply of service. Those who issue us phone card, the one that we put in our phones, all right, and what they do for us, the core credit and all those things. The law sees those things as supply of goods, or payment for the supply of goods, or rendering of service for VAT purposes. Okay, so those are the things that you are supposed to know. I think the most important thing is that we need to look at something we call the mixed supply. The mixed supply. Okay, what is a mixed supply? So you see that a mixed supply has inside the supply of goods and at the same time the supply of services. So which one would you say is the supply of goods? So you have supply of goods plus supply of services all in one. How do you differentiate between the two? How do you differentiate between the two? The guidelines is in section 31. Now, it says that a supply of service incidental to the supply of goods is part of the supply of goods. So let me give you an example. If I'm printing books to sell, now, if I take it to the photocopy people or whoever, you see, they will do copies. All right. Copies. They will be doing printing. Under a normal circumstance, printing is a service. But because this job is incidental for me to be able to supply the books or sell the books, all these services are regarded as what? Supply of goods. That is what we mean. So the supply of service incidental to a supply of goods is the supply of goods. In the same way, the supply of goods incidental to the supply of service is part of the supply of the service. So it means those of us in the offices who, when you are giving a contract to somebody and the person will, you see that there is person will go and buy some things to be able to come and do the job in your office. And you don't even know which part of the job that you are deducting withholding tax and all that. In terms of VAT, as in, should the person use service or goods? Because the standard service has its own percentage. We will later talk about the VAT flat rate. All right, on goods, flat rate is since 2022 has been 4% with the introduction of COVID. But before COVID, it was 3%. Now, and we all know that the service is what? 12.5%. Now, which one of these two apply? So like I said, the supply of services incidental to the supply of goods is good. So you have to apply this. So if that person you are contracting, you have to go and buy some things before you can come and do the work. You don't VAT the things as goods and VAT is service as service. But because he is using the things he's buying to enable him to come and work, all right? So it is the supply of goods incidental to the supply of services coming to do, and therefore that one will be service. All right. So the supply of service incidental to the supply of goods is supply of goods, and the supply of goods incidental to supply of service is supply of service. All right. So you need to know that. Now the implication is about the anti-avoidance provision in the VAT Act to prevent taxpayers who may supply service alongside with goods and only charge VAT on the goods because the service is different and all those things. So that is the reason why it's an anti-avoidance rule. Okay, so those are the things that you're supposed to know. Okay, and we've talked about the what we call a taxable activity. So we said that a taxable activity is an activity that is carried out by a person in the country, or partly in the country, or I mean, the key thing is that whether in whole or in part, it is a supply of service to another person for a consideration. Once that happens, these things that you do, they are all taxable activity. All right, and we made mention of plenty things around that. All right, so I mean, you need to go through the law. I'm referring to the section 5 that we did. All right, you need to go through the law and get more understanding of that. Okay, so now the next thing I want us to do shortly, we will be looking at, let's look at the taxable value. All right, how you determine the taxable value. And the taxable value, you are going to use IFRS 13, fair value things. All right, you are going to use that. But before I even do that, so let's talk about these three things. Okay. So what I'm going to do is that I'm going to talk about the time of supply, Then I'll talk about the place of supply. Then I will now move on to taxable value. Okay. And the time of supply, I'm going to look at section 39. Here I'll be looking at section 42. And here I'll be looking at section 43. All right, so that is that. Now, when do we say a taxable supply has happened? When do we say a taxable supply has happened? So now, the law gives these four situations. So in the case of goods and or service, the case of goods and service, the time the taxable supply has happened is when the goods or the service are applied to own use. On the date, the law says that on the date on which the goods or service are first applied to own use. Own use. So that is the key. The date the goods are first applied to own use. Okay, so please be careful of that. So, and in the case of goods and services that are supplied by way of gifts, the law says that it is the date on which the ownership in the goods passes, all right, or the performance of service is completed. So we are talking about supply by way of gifts. So ownership is parted. So you see, if the person has not applied the thing to own use, the time of supply has not happened. But in the case in the form of gift, then the time that imparted ownership, all right, or the performance of service is what completed. Is completed. So it's very, very important. In the case of any other situation, it is the earliest of, so any other situation other than goods and services applied to the supply of goods and services and the supply of goods and services in the form of what gift. In the case of any other, it is the earliest date of when goods and services are removed from premises of taxable person. Okay, or from any other premises where the goods are under the control of the taxable person. So that is why their businesses, so far as the thing has moved from your office, I mean, we see that the taxable, that is the time of taxable supply. Now, earliest of that, or goods are made available to the person to whom they are supplied. So availability to the person you supplied it to. Or performance is completed. So those who clear goods for people. Once you finish your job, performance is completed. Payment is made, or you've received payment. or the tax invoice or VAT invoice is issued. Invoice is issued. So the earliest of any of this time, because it is the time that you have made a supply. From that time, you have what? Ensuing month. Okay, so the earliest of all these. One, the time the thing was removed from your office. Two, the time the person who is supposed to receive received it. Three, when performance is completed, when payment is received or the tax invoice is issued, any of this time. Now, where the issue is about the time is about these things and not these things. So let's say of these ones we are talking about where payment is received or tax invoice or sales received, and only portion that is covered by the payment or the tax invoice become what? Taxable. All right, so if it has to be this, then if this is the earliest, then only portion of the payment received becomes the part that is taxable. I have had issues where I've worked in companies where managers are like, oh, but you sold to the person and the person has not paid. Why are we paying the VAT on it? But you see, that is the thing. If the person has paid and this become the earliest, you see, those people who do cash payment in advance for the service, these things become the earliest. And if it is the earliest, VAT is payable on those payments that you receive earlier. So it means that the remaining that has not been paid, VAT is not payable at that point to GRA. All right. So only that, except that, other than that, it will be the date you issue the tax invoice or the date you completed the job. All right. So please be careful. Or the date the goods was removed from your office, or the date the person who is supposed to receive the thing received. Okay. So that is it. All right. Now let's look at section 42, which talks about the place of supply, the place. The place. The place. Now, the place of supply is the place where goods are delivered or made available to the supplier, made available by the supplier. So where you deliver the goods or where you made the goods available. All right. So if, let's say, if the delivery or making available of the goods involves the goods being transported, then the place where the goods are when the transportation commences. So that is what we are talking about. So a place of supply of goods is the place where goods are delivered or made available by the supplier. Or if the good is by delivery or being made available by the supplier involves being transported, then it is where the goods are when transportation commences. So please note that these are statements of law. And so if it is by transportation, the place where the taxable supply happened is where the thing was before you started the transportation. All right. So that is that. That is that. In terms of, so we are talking about delivery, where delivery is made to or made available. But in the case where the thing has to be by transportation, it is where the thing was transported, where the transportation commenced. Okay, so please take note of that. It's very, very important. It's very, very important. Now, in the case of these thermal energy and heating and gas refrigeration and all those things, if the place of supply is the place of the supplier's place of business. Okay, so please take note of that. All right, so that is That is that. I think it's time we now go into the computations. All right, it's very, very important. The taxable value here. So here there are three ways we determine the value. Like I said, like IFRS 13, okay, because especially in port, you see that you need to determine the value before we can charge VAT on it. Now, here we are looking at the value of the supply, and we are talking about the monetary consideration that is on it, in addition to all taxes and levies. So here, what we are going to do is that, number one, we will take the proper thing, the invoice of the thing. Okay, so the pricing of the thing. And where we can't get the invoice, what do? You look at what? Comparatives. So here, the invoice, the price. All right. So, and we know that people maneuver these things. So where supply is not for money, or maybe partly for money, or of anything of that sort, what you are going to do is that normally, you see, the value is we are talking about taxable value. We are talking about the value on which VAT is computed. Okay, so we are talking about the value without VAT. So please be careful. So let's say you have goods sold. Let me use service, because that is where the confusion is. So let's say service fee is like this. A person will charge, let's say, NHIL, get fund, which is like 5%, and add, and the person will charge, let's say, COVID of 1%. Now, it is the value here we call what? Taxable supply, or taxable value, sorry. Now, it is on this value you are going to charge VAT of what? 12.5. Now we know it's 15, but like I said, because of labor. Then you see the total will become what? Your invoice amount. So please, now this is the taxable value. This is where all the taxes fall. So even withholding tax is here. Withholding tax, not this money. Withholding tax is on this money. That is what we call the taxable value. So we said that it is the value here, including all what? Other levies and other taxes. All right. So now, in terms of determining this is where the problem is. So if people don't get this, because the value is difficult to determine, then you use what? You use substitutes. All right. You use substitutes to determine it. Okay. You use substitutes. How much will be charged by substitute? All right. If there is no substitute, then it means you need to break down into component parts and see how much each component costs when you bring it together, or how much each component is priced in the substitute market. All right. So let's say a car, for example. So when you are importing a car, normally people will do wagadre on the car value. And you see, custom will give you a custom value on which they will now charge their VAT. Now, what I'm saying is that if your invoice is store, or if you bought a car from store, I mean from shop, brand new, that one, the invoice is legit, so they will use that one. What if you didn't buy it from store, it's a damaged car and all those things? You are going to see how much that car prices elsewhere in the market. Or let's say if you bought, let's say, a Lantra, all right, they are going to compare the price with, say, Toyota Yaris, to give Toyota Yaris to a Lantra. So that is what I'm talking about. A same car kind of substitute in that same level, which has the same characteristics, the same quality, the same quantity supplied. All right. So we look at the functional components, the reputations, and what the material comprising of. If they don't get this thing, then it means that they need to break your Elantra into the engine and find out the comparatives for the engine. They need to break your body. All right, find out how much comparative your body is making, because then they combine it and they get the value. All right, so that is what I'm referring to. Okay, so please take note of that. Now, I've spoken about the input and the output VAT. Spoken about the input and the output VAT. So let's go to section 48 of the law. Let's look at something. So we've talked about the place of, so I think I might have skipped this. The place of supply. So here, the supply of the following service takes place where the recipient uses the services, including the transfer of consignment copyright where a person uses the supply of consultants, engineers, architects, accountants, or other. So those will be where the recipient receives. All right. So take note of that. So this is what we've just done. So here is the key. I mean, it is the value before what? The VAT. Please note that. The value before the VAT. You see, it says that it's the consideration, which is the fee, with addition to all duties and taxes, excluding the tax. When we say the tax, we are talking about the VAT. So that is that. It is the value excluding the VAT. So that is the taxable supply. All right, so this is where I want us to look at. I mean, yeah, we've done input and output VAT, and I've explained the person as an input VAT, the person selling is an output VAT, right? At the end of the day, we net it off. All right, so that is that. So these are the deductible input VAT. It says that subject to section 49 at the end of the tax period provided under this act or prescribed by a taxable person may deduct the following from an output VAT. So we are looking at deductible. So all those expenses you do wholly and exclusively for as part of your generating your revenue. So so all those expenses that you do, they are what? Deductible. So a question is raised, like, let's say, let me ask you. So we said that all those here. So if you buy a car, of course, the car is used to produce income for the company and it qualifies here. But the VAT on the car is not what deductible. Why? 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 You will look at that later, but it is because you claim what? Capital allowance on that. Okay, so that is that. Note that we will look at that. All right. All right. So far as the thing qualifies under Section 9 of the Income Tax 896, then it means that it says that subject to the condition that one, the supply is a taxable supply, it is in respect of purchase made in Ghana, the taxable person in the possession is in the possession of the VAT invoice. So tax invoice is what the law says. So you see, if the auditors come into your office and they want to allow some expenses, if those expenses don't have VAT attached to it, one can say, so far as they are qualifies under the WEN, you can't disallow them. But in respect of VAT, when you are doing input and output VAT, if that thing you don't have the VAT invoice for it, you cannot be allowed the deduction. All right, you cannot deduct it from the input VAT if you don't have the VAT invoice. Just a minute, take water. All right. So that is that. I mean, so you have to have the tax invoice for it. When you say a tax invoice, what they mean is a VAT invoice, right? So that is that. Now, in respect for import or removal of goods from a bonded warehouse, the taxable person is in the possession of the relevant custom entries indicating tax was what paid. So that is what you use for the input. B says that input tax deductible is allowed under section 45. We will look at them. So this is section 45. Right. Section 45 actually talks about what we've passed. I mean, some adjustments. Talks about some adjustment that is made in terms of the determination of the taxable supply. The one that we talked about, I mean, using the comparatives, those things. I mean, fair value, using the substitute and all those things. Those are the things we are talking about. The supply, where the supply is cancelled, where the nature of the supply has it has been fundamentally varied. I mean, previous consideration has been altered by the agreement. Those are what we look at under section 45. And section 44 talks about the other things we spoke about in terms of fair value price determination. Okay. All right. All right, let's go on. Just how the light change. All right. There is massive lights out in Tema on and off, so I have to come to Spring Test to do this recording for you guys. Where even when the lights are out, you get some generator. All right. So you see there are parts where the thing is so we are looking at deductible input for mixed taxable and exempt taxable supply. You remember when we talked about the mix, it had goods and service inside. And exempt supply, we are talking about those ones that you don't even charge the VAT in the first place. All right. So the law says that a person who makes both taxable and exempt supply, so may deduct the input tax on taxable purchases and taxable import, which can be directly attributed only to the taxable supplies made. Okay, so you can only deduct only to the taxable supplies that you made. Now it says that where a person makes both taxable and exempt supply, but cannot directly attribute the input to the taxable and the exempt supply, as you can see under this section 1, that person may deduct as input tax on the taxable purchases and the taxable import an amount that bears the ratio. So here you use ratio computation. How much of the mixed supply the taxable supply or the taxable purchases are in the mixed supply. So you use ratio computation to do that. Okay, so we will look at that. We will look at that. I'll give you a typical example of what we are trying to look at over here. Now, so what the law is basically saying is that, let's say, okay, so these are what it's saying. These are, so if it says that you have, let's say, a supply, where's my board? So the thing is that we are looking at mixed supply and exempt supply. Okay, I think I should be getting ready to wrap up this part. I have another class which is supposed to start at 7 o'clock. So I have to get fast with this. So we are saying that there is a mix-up in that. Now, if the ratio of taxable supply to the total supply for that period is less than 5%, so for these things, if the ratio of, let's say, so you have taxable supply, the ratio of taxable supply to total supplies in which the mixed are in which the mixed are in, then what is going to happen is that if this one is less than 5% of the total supply, the taxable person shall not be entitled to any deduction of input VAT. All right, just a minute. All right, so what I was saying is that if the ratio of taxable supplies to the total supplies for the period is less than 5%, then what is going to happen is that the taxable person is not entitled to deduct input VAT for that period. That means that if the taxable person is generally dealing in exempt supply, since the taxable supplies are less than 5% of the total supply, he will not be allowed to deduct any input VAT. So most of the time, the fuel stations, okay, see what they are doing is mostly exempt. Remember what we did under special is mostly exempt, and also have some small supermarkets in there. I may not qualify to claim import VAT deduction for, let's say, electricity under this condition. All right, so that is that. But if the taxable supplies, the ratio of the taxable supplies to the total supplies of that person is more than 95%, is more than 95%, then it means that he is allowed to deduct the entire input, the entire input VAT allowable. Okay. So, but it must be noted that the Commissioner General can always approve or alternate, direct alternative methods for this apportionment. But it must be noted that all these things we are doing shall not apply to a wholesaler or retailer, because those ones are under what? The VAT flat rate, which we will talk about soon. You understand? Okay. Now, even this wholesaler retailer thing has been amended. Okay. It is now nowadays it's not all wholesalers that and retailers that are supposed to be on the VAT flat rate. There is also a limit that has been given them. All right. So now let's look at the computations now. So in terms of if the invoice that you've been served, if the invoice is VAT exclusive, okay, you can determine your VAT, your taxable value. Then thereafter, you can deduct your VAT. So, like I said, so amount, invoice amount, which is exclusive. It's just a VAT in name. All right. So you have that one. Then you add what? NHIL, get fund, COVID. All right. So this is 2.5, 2.5, 1% on this figure. All right. So you get them. Then you get what? Your taxable value. Then you charge your VAT, which is what? 12.5 prior to this year. All right. So on that, you get it. Then you get your total invoice value. All right. So that is that. That is that. Now, what if they give you the amount and they say that the thing is inclusive of VAT? The thing is inclusive of VAT. So what happens is that, so if the thing is inclusive of VAT, it means that what you are going to do is that VAT, therefore, which is 12.5, all right, is part, is inside, and therefore you can do 112.5 by the amount inclusive. All right, amount inclusive. So the VAT and the NHI must be extracted from the amount. In this case, the VAT is the first to always be extracted. Okay, so once you extract that, then you can do, once you extract the VAT first, then you can extract the others. So you have 2.5 out of what? Do 106. You can get by the amount inclusive, you can get the other one. Like get fund, which is it, or you can do, then you have 1 over what 106 to get your get fund, your coverage. Okay, you can do 2.5, 2.5, same for the get fund. All right, so that is what happens. Let's look at some example. Let's look at some example. Now, let's say, and I'm going to combine this thing with what something we call the VAT. I will look at the VAT flat rate and the VAT withholding. Okay, I'll look at it straight away from that. Okay, so let's say a manufacturer made the supply to a customer with an amount, let's say 100,000. So invoice amount exclusive. So always check that one, whether it's inclusive or exclusive of VAT. Once they say it's exclusive of VAT, automatically it's exclusive of the NHI and the get fund in the COVID because they all go together. All right, so let's say the amount is 100,000. So what you are going to do is to do your NHI, get fund. This one is 2.5, this one is 2.5, then COVID is 1%. So 2.5, 2.5 is 2,500, right? 2,500. COVID would be what? 1,000. So total, how much do you have? 106,000. Then VAT will now come in at 12.5%. 12.5%. So if I do 12.5% by the 106,000, what I'm getting is 13,250. So at the end of the day, I have 119 or 250 as the VAT invoice. Now this is the VAT. Okay, this is the VAT. Now there's something called VAT withholding. Okay, so VAT withholding is 7%. So it's the VAT is remitted. We did in our first lecture. So remitted what? On the last working day of the ensuing month. So let's say if this thing is February, all right, February 1, then it means that we need to remit this VAT figure on what? Maybe the last working day of February, March, all right, the last working day of March. But you see, you stand a chance of, if you are the one paying the invoice, okay, if you are the one who is supposed to pay this, you are a VAT withholding agent, you have to withhold 7%. We will look at those things. But first of all, you know that this becomes what? Your taxable value. So if you are a withholding tax agent, it means that you need to deduct, first of all, 7.5 on this one as withholding. Okay, so those are your tax liabilities. So 7.5 on this one. So 0.075 by 13,250 means, by taxable value is 106,000. And that one would mean that withholding will be what? 7,950. Then again, this one is remitted on what? On or before the 15th day. Okay, now the same thing applies. You see, this one is on this. So you have this money and the 7% on the VAT, 0.7 on the VAT, which is 13,252, is 927.5. This one too is remitted on 15th day of the ensuing month. So together, you have 7,950 plus this. Together, you withhold what? 8,877.5. All right, and it means if you deduct this from this amount, what you will actually pay to the supplier is minus 119,250. You'll be paying the supplier what 110,372.5. All right, where this one will go to GR. So please, these are the dynamics that you need to know. These are the dynamics. Let's look at something. If you were given this figure and they said all is inclusive, 119,250, how would you have derived your elements of VAT and all those? So you work like this, go up like that. The amount of VAT inclusive, where the amount, how will you do it? So let's do, say, 12.5 over 125 by the all-inclusive amount. Let's see how much we'll get. So 12.5 all over 125 is 0.1, right? Multiply by the 119,250. Don't think it's giving us that. This one is giving me 11. So I think it is because of the introduction of the COVID, it changes the formula out. It changes the formula out. So this is what we're going to do. How we're going to go around this. So let's see. So this one was 0.125 by 106,000. That is what we had. Just a minute. Let me attend to these people. I have another IFR intervention class today. Yeah, so if we want the VAT, I think that's it. Okay, so in terms of percentages, this is what you're going to do. If you want your VAT inclusive, and if they give you this figure and they want you to calculate the VAT or find this figure out of it, this is what you're going to do. You know, VAT is 0.125, 12.5%. So you do 0.125 all over what? 1.125. Okay, or you can do, yeah, it works. So that was it. I think that one will give you straight away 13,250. So that is how you go by it. I think, so if you make it 12.5, like we did, and you make, yeah, so 12.5 all over 1.125, you get your VAT straight out. Now that you have your VAT, if you take it off this figure, you arrive at your 106. In the same way, if you want the others to out of it, if you want the others out of it, the others, let's say, so we start from COVID. COVID is 0.1%, so there's 0.01. Okay. Over, so what will you have? 0.0, it's actually 1%. So let me say, if I do 1 and I multiply by 106, so you just do 1 over 106 by the new amount that you've gotten. So if you wanted this amount, I think you can go straight away. So if you get this, you less it up, all right, you get your 106. Or I think there is a way you can go directly. And normally I would do so the amount 119,250 all over 1.125 to get the value. So 119,250 over 1.125. Yes, so that one will give me this one straight away, the taxable value. Okay, to give me this. All right, so now if I do 1 over 106 all over this, there's 106 is coming from the fact that you have 2.5, 2.5, which is 5, then 1%, which makes it 6, so 100. So I'll get my 1,000. The same way, if I want these ones and I have obtained this one doing the VAT first, I can do 2.5 over 106 by the 106,000. So if I do 2.5 over 106 or by 106,000, I get my VAT, my NHI, and so on and so forth. So that is how you do the reverse. Okay, so that is that. That is that. The VAT flat rate is 4%. That one is applicable on goods. So instead of doing so for manufacturers, it's VAT flat rate. So that one is 4%. So I've shown you if you are the one paying somebody a supply, you need to deduct withholding tax on the taxable supply. And if you are withholding VAT agent, you need to also deduct VAT of 7%. Please take note of that. It's very, very important. Take note of that. I beg you. That one is very, very important to me. Okay. It's very, very important to me. So it means that you have to submit 2 returns, one on withholding VAT, then one on withholding tax. Please, withholding VAT is what? 7%. Withholding tax is what? 7.5%. Please note that. And you have to submit 2 returns. Okay, so kindly note that. It's very, very important. And also know that CST, communication service tax, is 9%. Also on the gross amount now, 9%. So please note that. Communication, so if you have an invoice where it's about communication, you do, in terms of communication service tax, you see the amount is here. You do communication service tax of 9% on this amount. You do there, then the NHIL and the COVID will come. Yeah, the whatever you get is what the taxable value before. So what I'm saying is that you have 9% on this to get NHIL, COVID, get fund will be 6%, right? You add them up. If there's tourism too, tourism is 1%. So you add them all up before you get your taxable value. All right, then you charge VAT on them. Okay, so please note that. Note that's very, very important. Note that. And in that case, you need to go around, if it is all inclusive, you need to work it back. All right. So the VAT flat rate, yes, even these days there are amendments. The VAT flat rate is now 4%. It used to be 3%, but because COVID came, COVID's 1% has been inculcated inside. So that one is inside. So let's say if you want to get the VAT flat rate fraction will now be what? 4 over what? 104. Okay, so that is how you do it. So if you have an all-inclusive amount of say 1 million, then if you want the VAT out of this, you are going to do 4 over 104 times the 1 million. Okay, and when you do that, how much will you get? 4 over 104 by 1 million. And that one gives me what? 38,461.53. Is the question that is given to you, check the date. If the date is before COVID, May 2020, this is 3% that applies. But after May 2020, it is 4% that applies. All right, so please take note of that. Take note of that. All right, I think these are the things that you are supposed to know. It's very, very important. These are the things you are supposed to know. Typically, it's the question this is how the past question quotes it. They will give you an invoice amount, whether all inclusive or exclusive, and they will tell you how much you are supposed to pay. Please, any time of that, check, because you are supposed to pay withholding tax and also withholding VAT. This one will be 7.5% on the taxable value. But this one will be 7% on the VAT value that you find, the VAT value, the VAT amount. VAT. So here we are looking at the 12.51. And normal now be 7% with withhold. You do this one on the on or before the 15th day of the ensuing month. The balance will go. That one you pay to the person, and the person will be the one to remit it to the GRA. So that is what happens. You remit to GRA on or before the last working day. Please, it's not the 30th, the last working day of the ensuing month. Please take note of that. This is very, very important. It's very, very important. So that is the computation part, all right? That is the either inclusive or exclusive. You have to work it back, all right? So those are the things you should know. Okay. I don't think there is any other thing that and whatever you do, compare your input VAT against your output VAT. Then if there is a refund, you take, all right? So I want us to deal with this illustration. Then we call it a day. So let's say somebody has an invoice to pay, and the invoice is 500,000, exclusive of VAT. So it means that you have to do, so invoice amount is exclusive. Okay, so it means that what we have to do is that we have to charge the NHIN, get fund and COVID. Dukan in Aboma is 6%. All right, so let me do 6%. 0.06 by 500,000. That gives me 30,000. Okay, so it means that my taxable value will be what? 530,000. So that's the taxable value. All right, now what will happen is I need to charge VAT, which prior to this year is 12.5. So what I'll do is that I have 530 and I'm charging 0.125, and that one is 66,250. All right, so if I now add that one to my 530, 1, 2, 3, I think I have 596,250. So that will be the invoice amount. And what I'm saying is that in this case, what you do is that you withhold. If you are withholding VAT agent, what you do is you withhold 7% of this, and 7% of that will be how much? 4968.75. This is the taxable value on which you are supposed to also deduct withholding tax. So the 530 will suffer not a normal withholding tax of 0.75, 77.5%, which you have 39 or 750. Okay, so the final invoice that you have to, amount that you have to pay to the supplier in this case is when you have the 39, 750, 49, you have 4968. If you add it 0.75, you add it, you are getting what? 44,718.75. You have to take it out of this figure. It's 596,250 minus 44,718.75. Okay, so you pay the supplier 551,531.25. Okay, so that is that. Then this one will go to a GRA. And you are supposed to file and pay on or before what? The 15th day of the ensuing month. Okay. The 15th day. Oh, what is happening to this? So all that I'm saying is that it's on or before the 15th date of the ensuing month. All right. So take note of that. So these are the computation aspect that comes in GL. And don't forget that apart from the one that you do on or before the 15th day, the remaining of the VAT, you have to file them with on what do you call it? The last working day of the ensuing month. All right. So please take note of that. Take note of that. So the agent's responsibility, you have a VAT to file, you have withholding tax to also do. Okay, so please, those are the things. So take up past questions. Try your hands on these things. All right. So that is all you need to know, apart from the theoretical part that you need to understand. All right. So thank you very much. Thank you very much. I think the class is actually 7:30 for the FR. All right. So that is that. That is that. It's a long class. Thanks for staying with me.